found this video. I found it very interesting, so I want to play it for you. Have a listen.
Let's talk more about the markets right now with Jared Woodard. He is head of the Research Investment Committee and the head of ETF strategy at BofA Securities. And Jared, thanks for being here this morning.
Glad to be with you.
All right, let's just talk about where we are, where we've come. I was surprised. I guess it kind of snuck up on me that we are down 8% from the highs for the S&P. This has been a little bit of a stealth decline and hasn't felt nearly that bad. This is a normal range for a correction. Do you think we're going to get a bigger one here or no?
Absolutely plausible that you see more volatility, during this year, even if we end the year maybe higher. You're down in the S&P. You're also down in Treasury bonds, which is a repetition of last year, if you remember. Down almost 20% in stocks, almost down 20% in Treasury bonds. And so for the third straight year in a row, you're looking at losses on your government bonds, something that's...
All right, I want to chime in with this because this is what I've been saying for a long time, that bonds are horrible investments. As interest rates continue to go up, these values decline, the bond market is down. Did you hear what he said? 20%. So I've always said, friends don't let friends buy bonds, steer clear, but let's keep listening.
Never happened before in U.S. history.
Wow.
So even though the numbers aren't that big, it's a moment where a lot of the big risks that we all watch, we think they're long-term risk maybe, they're now happening in real time. And they're affecting markets in real time, and I think that creates a situation that a lot of investors haven't been prepared for.
So how do you prepare for it?
Well, what are those big risks? We talk about globalization reversing, we talk about inflation being a risk, demographics, levels of debt. As all these things show up in markets, it requires, I think, a different asset allocation than what most people have, different focuses in your investments. When we look at a lot of investment portfolios, we see portfolios, asset allocations, models, and so on, that aren't that different from what they were 5 or 10 years ago. But the world is different. The world has changed, and so you've got to allocate differently across these different asset classes.
What's wrong with their allocations now? How would you restructure? And I realize that's a broad question.
It's huge. We don't have. It's a question of owning the assets that are going to benefit from a world of structurally higher inflation and interest rates, more stagflation than you've seen in the past 20 years. So instead of owning the winners of the past 20 years, treasury bonds, tech stocks, growth stocks, virtual, you want to own the assets that can benefit from inflation, like value stocks, like energy, real assets. These are the things that are more robust.
Okay, so notice what he's saying there: value stocks, energy, growth stocks, real assets. And, when they say real assets, that is gold and silver. That is what is going to benefit in an inflationary environment. Also, we've been talking about the food companies, right? Those companies, the big corporations, that the Cisco's, Empire Foods up here in Canada. So these big companies that are literally printing money because they continue to raise prices. Let's keep listening.
Things that, even if it's a question of just being more balanced as opposed to the unbalanced growth and treasury-heavy portfolios many people have.
Technology has escaped, a lot of technology has escaped from some of the downturn you would have anticipated because of AI and the new developments that they've seen. Can technology kind of work their way out of this again because of innovation?
They can see upside over the long term, but people forget, since the lows of COVID, energy stocks have actually outperformed the tech sector by 200%.
When's the stag coming?
There you go. Energy stocks have outperformed the tech sector by 200%. Did you hear what he said? Oh my God. Hey, energy is the way to go.